I'm Michael Oliver Weinberg. I'm an adjunct professor at Columbia Business School, and I work with a couple of family offices and an endowment on the investment side. I think the model is really the quant funds, the systematic managers. They were really the early adopters of AI. For example, 8 years ago when I co-founded a firm called Move 37, it focused exclusively on managers using machine learning and alternative data. And those were generally systematic equity managers or quant managers. And I think that's the paradigm for the private markets, where quant managers, for many years now have used AI from start to finish, from determining, from looking at the investment pool through investing, risk management, portfolio management, and I think that's where private markets are headed. So I could envision a world where in private markets you use AI to help in figure out what the universe of where you might invest is. Then you use AI to help target potential acquisition companies, if it's PE, for example. Then you use AI to draw up the contracts. Then you use AI to monitor the companies. Then you use AI to make recommendations on when to sell. Then you use AI to determine if there are red flags, if the portfolio companies aren't behaving properly. And lastly, you even use AI to draw up the contracts to sell the companies. So that's, and again, when I say AI, it's really human plus machine. But that's where I see it going in the private markets, and I see a lot of disruption coming there, where right now private, particularly equity, for example, firms are very old school, the way discretionary equity managers were, and I see that moving towards, over time with disruptors, the way systematic quantitative managers are, where it's a human plus machine the whole way in the private markets, particularly private equity. Sometime around or after the election, it must have been after the election, and I'd suggested it was a sort of pencils down moment. I used to work for George Soros and run money for him, and as well as Scott Bessent, our Treasury Secretary. And pencils down meant almost as though you're someone at school where you put your pencil down and you just wait and sort of see what goes on and think. I think that continues to be the moment, and I think we've witnessed that over the last week or two, where the tariffs have created this massive volatility and uncertainty. I don't think, in my view though, there is very little doubt that they're massively inflationary if they stick anywhere near where they're proposed. In turn, they will also be contractionary for the economy, so likely lead to negative growth or something along the lines of a recession, probably a stagflation outcome. So where does that leave you as an investor? Well, recently, for example, spreads have been contracting in private credit, so as a lender, it's not been a great market. As a company, it's been better. But again, I think that's all uncertain now in light of the tariffs. Similarly, for private equity, I don't see how, if you're a private equity firm and you're investing in companies that have supply chains and raw material and input costs, you can make any investments now when it's so uncertain what happens with all this. I think it will create a very good opportunity set for equity long short investors, because they will be able to benefit from this volatility and dislocation, and companies that are, for example, oversold and or overbought. But I think that's a little bit down the line. That's not yet. And then lastly, if you look at venture capital, venture, I am quite bullish on venture outside of AI. AI, I think, is in bubble territory, and I think the public AI stocks are also quite overvalued. Less so over the last week, but with the sell-off, but still quite overvalued. The issue with venture will be the IPO market is now also significantly impaired from the tariffs because of the uncertainty. There was, of course, CoreWeave, a successful IPO, at least at this moment, a week or two ago, but that was the exception. IPO markets are largely stunted. So I do think early stage venture outside of AI is interesting, but it will be challenged with the diminished M&A market. As of a few weeks ago, I thought private credit was not attractive as a lender or an investor, but And private equity was the beneficiary of that because it's the other side of the coin. They're financing their companies. So if all of a sudden you're a private, if you're a company and you can refi at a significant discount, that's accretive. It helps your cash flow. It helps in all respects. But now, again, because of this uncertainty and because of the uncertainty with inflation and rates, for example, I think Fed policy is going to have to be very hawkish, and/or rates will stay high and/or go significantly higher, because I don't see how, even if a modicum of the tariffs remain, they're not massively inflationary. So in light of that backdrop, I think as a private equity or private credit investor, you have to wait till we get a little more certainty as to how this will all play out. The investors at Cayman Ops need to be thinking about what I started our conversation with a few minutes ago, all of that. So cyber, the cloud, LLMs, regulation, transparency, unintentional biases, all of that will be integral for many perspectives in terms of running their business, from a cybersecurity perspective, from a regulatory perspective, from an investment perspective, from an efficiency perspective, a profitability perspective, and even a competitive perspective. Because if you have two firms, for example, and one is using the engineering tools and the other isn't, and yet one is gaining the 15% benefit that I mentioned, and the other isn't, that firm should be, say, 15% more profitable or more productive, or be able to use that 15% for other aspects. So I think all of what we started this conversation with, it's a good way to sort of wrap up almost, will be crucial for these firms. And I think that's what's great down here now at this conference, is that we're having these discussions with the thought leaders on these issues and how they're dealing with them and or mitigating these issues.